Hey, good afternoon, everyone. This is Trader Tim from eminimine.com, bringing you a trade recap video on this wild week here. Today is Thursday, the 7th of January, 2021. Before we get into today's ES trade, I just wanted to pop on the daily chart here. This channel that we're in has been pretty sustained over the last couple of weeks here. If I flip over to, we can set it up here on the daily of the ES as well. Just grabbing the lows. Oop, don't want that one. Grabbing the lows. In this case, using the bodies because we have tail, tail, tail. The bodies is where there's been more confluence of support. And then coming back to the top here, you can see how on the ES, on the futures, we're actually above the channel. So you compare that to the SPY here, that's a little bit tighter channel compared to the futures market, but the same sort of sentiment is in play in that we are at the top or the upper end of the channel. Now, we have further targets beyond the -23. That's where that -61 comes into play. And you can see if I'm just going to take the channel off here to clean up the chart, but you can see we have the retracement drawn like this from the 19th of November to the highs at the 9th of December. And we've completed its target here at 37.50, but are on our way to 38.15, which would be the sort of extended target. That's where an extension would come into play, where you would draw from highs to highs as a possible next pullback point. Typically, those extensions will line up with the prior cluster of highs here. But from a daily chart perspective, just trying to get bearings or getting a sense of where we're at in the larger trend is helpful when we dial it down to a smaller time frame, because as we saw today, when we go to the 15-minute chart, we broke out above yesterday's high, which put us into once again new highs. And so we'll get to that here in just a second, but I wanted to comment on a couple things following up from Tuesday's trading session that we did. I started the year off with putting on some puts at the open on the gap up as a hedge to protect my long-term positions. Well, once we came up and broke the 61.8 of that short that only happened to encompass the high and low from that first day of the year, you really can't hang on. You can't fight the trend and be stubborn about it and say, well, it's going to come back, it's going to come back. You just have to ask yourself, okay, what's working and what's not? Well, clearly the market is just shrugging off any sort of non-positive news, if you want to phrase it that way, pretty much taking any news event and giving it a boost to the market. And if we look at the swing low back here on the 21st, we didn't break that swing low on the first trading day of the year. Therefore, that one-day decline is not very sustainable. So if we sell off here, it's more advantageous to let us break the swing low and then draw up, in this case, the short, and look for an entry at that 50%, as opposed to chasing the market on the initial breakdown, because sometimes, or in a lot of cases like this, you're just selling off to either up like a support trend line that might look something like this, And when you dip below that trend line, if you chase this short, you're really just selling into a reversal. Same thing goes for like trying to just pick arbitrary tops. The plan going into the year was expect selling right out of the gate. And while that did occur on the very first day, clearly it did not ensue in the following days. So you can't be so stubborn that you're going to hold on to a position, whether it's long or short, and let it come back. Luckily, I was profitable on the position, but I wasn't going to give back any more than letting it go beyond the 61.8. So, it's pretty easy to get burned if you're just going to try and pick tops and pick bottoms. That being said, let's say you're looking at the SPY here and, seeing the market come down to yet another touch of this up trend line, using that as a buy point, buying when the market is going down, not necessarily saying this is the bottom, but identifying that there is potential support there to look for an entry. So you're not just hitting the buy market button, you're using the support levels and the resistance levels to tell you, okay, it's time to look for a setup. So start with those support and resistance levels and then move on to your setup. You don't want to just say, oh, well, the market's up. I'm just going to sell. If the market's up and we're at a potential resistance point, then looking for a short setup, which would involve, typically breaking some kind of swing low, will then initiate a lower risk short entry. So rather than just catching a falling knife or selling because the market's up, try and use those support and resistance levels as triggers to then say it is now time to look for an entry. So if we go to today's intraday chart, what you probably saw, similar to what I saw here, was yesterday we made kind of this triple top right around 37.75. If I go back to the daily chart, you can see that the trading hours only from yesterday, 37.74.75 was the high. And coming into every single day, the high-low close of the prior day is a very good place to start for looking at support and resistance levels or lines in the sand. So, drilling down to the 5-minute, we had the gap up. We started to trend a little bit higher, but we moved sideways for about 15, really it was 20 minutes. All 4 of these candles moved sideways. So what I did was and so you don't always, what ends up happening, and we talked about this on Tuesday, sometimes you don't get a retracement. And what are you going to do? If I draw up the low to high here, the very first retracement of the day was a bit early. So if I just take the first 5-minute bar to the second 5-minute bar, looks something like this. And so we did trade at it at about 10 minutes in. And so I typically wait 15 minutes to be able to get some anchor points, be able to see what kind of activity is happening rather than just jumping in trades right at the open. And so, if you look at this 512 tick chart, it's not the prettiest looking chart. I mean, if you came in here and drew up a short, then came in here and drew up a long, things are kind of range bound for this 20-minute block. So once we got over into this 20-minute mark, look at high, 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 high. Very much a horizontal resistance that was beginning to form. So just drawing that as your resistance point, and rather than knowing that, okay, on the daily chart we are approaching new high territory. I mean, it'd be the same here on this chart, but But by looking at the daily chart, we know that there's not some resistance over to the left. If we break into 75s above that, 37.75s, we are now into new high territory. So, like we talked about on Tuesday, I just coming in here, placing a buy stop, one tick above highs, same initial 2 point stop, and just trying to trail as best you can. And so when you start ripping like this, you can use half size on these because um, typically you're looking for a bigger trend to form. So if you're a little bit concerned with taking a full stop out or full size risk, if you dial the risk down a little bit, your your goal is to trail it, so you're not looking to really take a small amount off the table. You want to try and stay in because you're in open space, in new high territory. So just by trailing the swing lows, and this thing moved really fast, trailing the swing lows on the way up, you're able to stay in for a bulk of the trade, at least up here till 37.85s. If you have a couple of contracts, you can, with these one candle dips, if you don't want to tighten your stop up underneath that candle, it's okay. Waiting for a little bit bigger pullback to ensue is going to be a bigger swing low to utilize versus just a one candle. But even if you're taking out at 37.85s, that's a 10-point move in a matter of, it was like 5 minutes. So not your everyday move, but it's not every day that you break into all-time highs. So, and again, this is trading hours only, so that's why you see the gap from yesterday to today. So that was the really the setup for today. Seeing earlier this week how the market just shrugged off every piece of negative news and moved higher, there was no way I was going to be putting on a short, and I probably won't intraday until there's some sort of bigger reversal bar or something that looks a little more bearish. It's the same thing goes for Tesla or for Bitcoin. Why would you come in here and just try shorting when nothing about this trend says the uptrend has failed or the uptrend has broken? So, the trend is your friend until the end, and if you fight it, you're going to get burned. So better to just, if you were short at some point, take a small loss and move on. Because if you stick with it and you try to hang on, you're just going to be, in a lot of cases, wiped out. So that's all I got for you today. That 80-20 that I mentioned is a very good exercise. Constantly, every day or at the end of every day or every week, just ask yourself, okay, what worked for me this week? What gave me motivation? What got me fueled or fired up? What trades worked really well? And then say, okay, what didn't work? What got me down? What trades didn't work really well? What made me feel lethargic and lazy? And then you just list them out on a post-it note or whatever and say, okay, next week I'm going to do more of what's working, and I'm going to stop doing the things that weren't working. And then you can constantly be just course correcting in a very slight way, but still stay on target. So I hope everyone has a great rest of your week. Any comments, leave them below, and don't forget to give the video, if you feel it deserves a thumbs up, give it a thumbs up. Thanks. Have a good one.